Now, it's either supreme confidence or hubris, but the steady stream of stories in the past months about a global slowdown, falling steel prices and a wobbling Chinese property market is not changing the script for Rio Tinto. At an investor briefing in Sydney, the company says it sees no change in the long-term story for China, and Rio would be continuing to invest to keep up with demand. In a moment, we'll hear from CEO Tom Albanese, but first, this report from Alicia Barry.
Whilst promoting its long-term prospects, Rio Tinto has urged investors to look beyond the current market volatility, even as concerns about Europe intensify.
There's the greater recognition that this could have negative knock-on effects on Australian growth. We're very mindful of that, but at the same time, we would see that China will continue to be a strong buyer of everything that we produce out of the Australian markets in particular.
And to take advantage of that, the company is ramping up capital expenditure next year with a 17% increase to $14 billion. Rio Tinto says China's big demand for steel is expected to continue well into the next decade, with the country consuming 700 kilograms of steel per capita by 2030. Rio Tinto's iron ore division has now raised its capacity expansion target in the Pilbara in Western Australia by 20 million tonnes by 2015.
The story, as you can expect, is still very much about China continuing to drive world steel consumption, with India and others in the slipstream.
However, the company is worried about the volatility in the spot price, but says it is still high by historical standards. Analysts say while there's no dispute about the volumes Rio Tinto can achieve, prices will be the key issue for investors.
That's the key difference, distinguishing between the fundamentals, which very few people dispute, and the impact on pricing.
There's no doubt about the impact of falling aluminium prices, now sitting below the cost of production. Rio Tinto's moves to turn around the underperforming businesses and divest 13 aluminium assets, including 6 Australian and New Zealand businesses to be branded under Pacific Aluminium, drew the most questions from the audience.
You know, I can't be sitting here in 12 months' time and expect and say, OK, it's been a success if you still own it.
What investors may be a little weary of at this point in time is what value are they actually going to get for those particular assets.
Analysts say today's update has done nothing to lift the profit outlook for the company.
We think that the numbers that are out there in the market will be hosed down over the next few days.
In spite of that, shares closed up 2% but have lost over 25% since January.